Hello Proponomics people, and welcome to the longer form explainer video for the 16th of December 2023 Proponomics Advent Calendar. And today I'm talking about demographics and their relationship to house prices. So first of all, what exactly are we talking about when we're talking demographics? Well, we might be talking about the age of a particular population and how that shapes up, and I'll talk a little bit about how that can be important. We might be talking about the income of a population or a particular subset of the population, or the rate of change of that income upwards or downwards. And we might also just be talking about the growth in numbers in that population, or indeed if that particular population is falling and what sort of impact we'd expect that to have on house prices, supported of course by some data as usual. So particularly population growth rates have been shown to be one of the big drivers of house prices in areas over the years. And of course, I talk quite a bit about the price of housing in the UK, but that isn't necessarily particularly relevant to everybody, because who does the average apply to? Well, it applies to people who own lots and lots of property all over the UK in different locations, and things would then average out. But even then, if you own lots of property around the UK, but you own no property in London, for example, it won't be relevant to you what's happening in the London market necessarily. It's relevant what's happening to you in the rest of the provincial market in the UK. So we have to be careful with averages. But this can be particularly useful on a regional level, or a city-based level, or even a town-based level. Because, as a good example, Bristol in the 2010s at some point, the population was growing at over 4% per year. Now that's a huge number compared to the UK's average of about 0.5% a year historically in recent decades of population growth rate. So 4% is 8 times 0.5%, and Bristol was growing 8 times as quickly as the population of the UK. And guess what followed? Well, of course, the Bristol property market has been up like a rocket in certain years in the past 10 to 15 years, and the demographic pressure is definitely part of that. So why might we be interested? Well, that's it. We might be able to predict future trends, especially when it comes to people's age. We have that data. We have a nationwide census every 10 years where everybody, by law, has to report things, including how old they are. And of course, we do have other national databases that tell us how old people are, things like passports, driving licenses, and all the rest of it, and birth certificates. So therefore, it's not a surprise when we know, for example, there was a big bulge in the population after the war, that generation known as the baby boomers, when those baby boomers started to retire, which started in 2010, and is a phenomenon for that bulge in the pyramid that would be expected to go on for about 20 odd years. We could think, how would that change the type of housing people might demand? So what do we mean by that? Well, for example, people might, as they do in the UK, have a tendency to move towards a particular coastal town, or to the south of the country, or to a coastal town in the south of the country, and get the double whammy. Retiring to a seaside resort was a big trend. So what would we have expected to see over those years? We'd have expected to see those seaside towns outperform the market in a lot of the rest of the UK. When did we also see that occurring? Well, we saw a lot of that post-pandemic, where people's working patterns changed and working from home, or at least a hybrid style situation, became a semi-permanent or a permanent fixture of the job market. And so people who are paid particularly well were much more likely to want a second home, perhaps in the southwest of the country. We saw that property market do exceptionally well post-pandemic, as the superior climate and the fact that house prices were not overly incredibly ridiculous combined together to see that market move forward in pricing. How else can it be interpreted? Well, there's a very large number of children who are going to be between the ages of 18 and 30 that we already know about over the next 10 years or so. What relevance might that have to us as property investors? Well, these are the people who are likely to go into the rental market, and there to be a significant demand for rentals. And then you break that down and look at that on a regional level or on a city by city level. For example, Birmingham is often cited as the youngest city in Europe, and you can already see coming over the next 10 years a new wave of demand as people of what would traditionally be considered a more rental age than a buying age come of age, and therefore put more demand on the rental market. What does that mean is likely to happen? It means that rents are likely to go up. apart from anything else. And that investment money may well push house prices up as well. So that's an important factor. So we've talked about population movements there. We've also talked about age. And then what about income? So what generates income and a change in income in a city or a town or a region? Large infrastructure projects. They create a first-hand effect of drawing lots of contractors into an area. And again, an example in the Midlands would be HS2. Although, of course, there's been so many changes over the years. You might use another example of something such as Hinkley Point down in Somerset, which is a major project and also puts quite a bit of pressure on a relatively small community and a small rental community, and creates a huge need for short-term accommodation, which is extremely important if you're looking at investing in those sorts of areas. So you can see where demographics can be oh so important and really inform you as to what might happen over a longer period of time. If large infrastructure projects are happening, or there's a trend to try and level up, and it not just be a political phrase, but a really genuine effort to level up, companies are likely to move out of London. Where are they going to move to? Birmingham, Manchester, but potentially other cities as well. So where is this going on? How does that impact the income levels of that population? And what is that likely to do to which specific units in the rental market? If we go back to the baby boomers point, then perhaps a lot of families might be downsizing because they'll sell large homes and there'll be more demand for, well, retirement or age restricted or those sorts of properties. And of course, that's how some of the retirement specific companies like McCarthy & Stone and Churchill, and there are plenty of others available, have seen an opportunity to build into that marketplace and started to build companies with huge balance sheets that really take advantage from the fact that baby boomers have got affordability, they've got firepower, and they've got the want to buy a new unit from the age of 65 and more likely 70 and 75 onwards, and they're servicing that sort of demand. So hopefully that gives you some idea and some insight as to how you might try and apply demographics to your particular strategy or your particular areas of interest. It certainly worked really well for me over the years. See you again tomorrow.